Uh, this is a presentation put on by Wheelhouse. So the data we'll be using is Wheelhouse data. That means our market data, any other kind of like tidbits. A lot of this data is actually going to be free to use, whether or not you're a paying Wheelhouse client or not. So the market reports I'll show you will be free. I do have some specific sets data, which means like kind of like more regional market reports. That is partially free, partially paid. And then I'll mention a lot about pacing and how like your own portfolio is going. And we have a full tool set to allow you to see pace and kind of like same time last year and know exactly where your sales are falling. So if you need some additional data tools, we'd love to help you get set up on that. Just let us know. In addition to that, if you are looking for a pricing platform, we are the pricing platform for enterprise, but we do work with everybody. We have a robust training program to use our platform. And if you want to join the likes of like Avant Stay, 360 Blue, Brett Robinson, Vacasa now, Casago, most of the large enterprise revenue teams in the space do use Wheelhouse, and we'd love to have you join us as well. So enough about that. Um, and let's go into some market data. While I'm pulling this up real quick, would anyone like to chime in with kind of what you guys have been seeing this year in the market? How do you think it's been going for you? You guys aren't a super talkative group, but that's okay. I guess I'll just listen to myself talk, and you can listen to me too. Please feel free to chime in. So what I have up here is pulled up the Wheelhouse market report. So these market reports are going to be pretty high level market data. You can see here that we're covering a pretty wide area. We're looking at the city of Savannah, and then we're going all the way up from like Tybee Island, all the way basically across the coast, St. Simons Island, that kind of thing. So this is really, even though we're calling it Savannah, it's really like the Georgia coast, right? Um, so we can use this data to get kind of like a high level overview. I have also pulled up a few other uh, areas to kind of look at. So this is just the city, downtown. This is along the coast. Um, and we can kind of take a look at those to see how different that kind of trends kind of are. But I do want to kind of cover a couple like high level trends that we've seen across the country because I'm in a position to talk to people really all over the place and to talk to people who are both professional revenue managers and non-professional and look at their data as well. So there's a few trends that have been kind of going on. Um, for one, 2025, not quite as good of a year as I think a lot of people were hoping, right? If we roll back the clock, I don't know if any of you guys were attending DARM or VRMA back at the end of 2024, but you'll recall that the kind of sentiment was kind of interesting then. The summer was a little rockier, but it wasn't bad. But there was a few bumps that people hadn't expected at the summer of 2024 across a number of markets that had been real strong. And so those kind of speed bumps were a little bit of a wake up call, but fall did really, really well for most markets across the country. When we got into the end of the year, early booking for 2025 was very, very strong. So people were looking at the early booking and seeing that, I don't know if you were at any of those conferences, but Key Data did a good presentation and basically showed that early booking was up. Now, there was a few hints there that maybe things weren't like just purely up because ADR was down a little bit, but early pacing looked really, really strong at that time. Um, and it was kind of a good sign. And that continued through like January and February for most markets around the country. We'll put ski markets aside. They operate a little differently because they're on a totally different time frame. So these kind of like summer markets, January, February, despite being a low season, did seem to perform pretty well. But once we hit March, pretty much almost every market across the country started to slow down in particular. Now, there's a few caveats to that. Markets that had like a March high season didn't necessarily do that. There was a little bit of pressure in a few. Orlando has been feeling pressure, and they usually are pretty strong in the March. Phoenix was feeling pressure. The city of Savannah, we'll take a look at in a second. They usually have a very, very strong March. But generally across the country, March, we start to see pretty big slowdowns. At the time, it was a really big surprise, particularly to people across the Panhandle and anywhere where there's a big spring break group, because it was not an expected slowdown. A lot of markets were expecting actually higher performance, especially based off of the pacing that was being seen at the end of 2024. But that ended up not coming in very well. And then as we got into April, very rarely did a market recover the losses that they had in March. So really 2 months of bad. Sometimes people would recover a little, especially if you're a really strong Easter market, but often that recovery for Easter didn't make up for the fact that there was like for the bigger loss in March. So people were generally down by the time we got into the end of April and most markets around the country. That continued pretty much through the spring into early summer for most markets, and then we start to get a little bit of a split, right? The markets across the Panhandle and in some of the Southeast markets do start to recover their occupancies in the summer. Markets in the Northeast and the North really don't. So really anywhere where there's Canadian travel, they do not recover at all. They continue to have pretty substantial occupancy shortfalls across the board. But those summer markets start to recover in the South a little bit, not necessarily always at the same ADRs, but at some, but getting back to kind of maintaining some of the market occupancy they were at. And then once we get into August, we start to see that fall off again. And getting into September, we've seen that September has been under a lot of pressure for most markets that I've looked at really this year. So September, pretty poor. October, kind of mixed with some mixed signals, right? So October had been pacing very well until about the end of July, beginning of August, and then it started to flip across a lot of southern markets. So really a mixed year across the board, except for in the Northeast where they've just been down pretty consistently. So that's kind of like the story of what I've been seeing around this area. We can dive into what's going on in Savannah right now. Does anyone have any comments or questions or thoughts before we jump directly in? Nope, didn't think so. All right, so let me find my pen here. I assume you all can see this. Um, we'll use that when we need to. So I'm going to start at the high level. We're going to go with trends. Trends are nice. They give us year over year, month over month. And this is a graph that I think is very helpful. I'm just going to focus on 2024 and 2025 right now. But this is a graph that I think is going to be one, occupancy is a good surrogate for demand. So if you see occupancy trends, usually you can understand how like the demand is in the market. We'll use another one in a minute called asking rates, which is really how the supply is responding, so how the properties are responding in the marketplace. But I think this is a really good kind of view to utilize. It's also, I think, a view that you can use or a chart that you can use to talk to owners, right? There's a lot of complicated KPIs in our space. Owners don't necessarily need or want to understand all of them, but usually people can understand an occupancy graph, and it tends to be pretty simple. If occupancy is up, things are probably going pretty well. If occupancy is down, things are probably not. So this is a good graph, I feel like, to show owners in particular what's going on, to make a case for what you think is happening in the market, and then also to then tie that to what your strategy is. So for example, if occupancy is down, you might say, hey, occupancy is under pressure. I expect that to continue. I'm going to be more conservative on rates, or maybe like a drop weekday rates or something. So looking at this, we can see a few of these trends that we've seen that I mentioned before. January and February, pretty stable, but it's, January in particular is a low season. We're starting to build up into the high season. By the time we get to March, we start to see an occupancy shortfall at the market level. Now, this is going to include both the city and the coast right now. We'll break that down a little later. We do see some recovery for Easter, but this recovery on occupancy is not enough to make up for the shortfall in March. So it's more than just Easter moving that is starting to cause some occupancy pressure and occupancy shortfalls across the market. That pretty much continues through early June, where we see a slight, slight shortfall across the market in occupancy. So the market is under pressure, but it recovers a little bit in July. We see that occupancy start to come back. before it starts to drop a little bit in August, but really not that much. So still mostly recovered. Now the question is, as we get into the rest of the year, where we also have kind of like a higher season for October, which I believe is mostly going to be driven by the city, not so much the coast. Um, how is this going to recover in the market? How are we pacing? I did pull up some of the pacing data. September's pacing pretty poorly. Basically the market level on the books is a little more than half of what we had last year. Well, there's only 6 days left in the market, right? So we're pretty far behind. We're about 10% behind in pace in September. This trend, something we're pretty much seeing across the board. September is exceptionally weak for everybody pretty much around the country. I don't know that I've talked to someone where September is really strong. Um, and that seems to be something that we're just seeing. Unknown the cause, right? We are seeing really high last minute booking. So the booking windows are shifting. Some of this occupancy is probably going to be recovered. I wouldn't be surprised if this jumps up quite a bit more than like the kind of occupancy you would have put on last year, but it is behind and likely to fall short. My hunch around why this is going on is, when we look at, there's been a lot of big economic news this year at a high level. Like we've had economic shakeups, stock market shakeups, instability. Those things all cause buyers to kind of pull back a little bit. Consumer sentiment is pretty low. It's at some of its lowest points, I think, in recent memory. Um, but sentiment to travel is still high. People still want to travel. So there's kind of like a mixed message there. And I think what's happening is people are maybe willing to go on one vacation this year and spend it, but they're not taking as many of the kind of like impromptu or smaller trips as we hit the shoulder seasons. It's where we're seeing some of the like, normally spring is a shoulder. Not so much here, but we see a lot of weakness in the spring. Fall, normally a shoulder for a lot of these summer markets. We're starting to see kind of weakness across the fall. My hunch is that people are not making that same kind of second trip unless they're planning it. It's exceptionally last minute, which means it's much more difficult for certain types of homes. If you have an apartment or a studio or maybe a two-bedroom, those can fill in the very short term pretty reasonably. It's those larger homes that now, if they hadn't gotten booked early, uh, are potentially in some trouble because they're not going to book in that middle window that we're used to. That consumer seems to be missing this year. Now, as we go into October, which kind of kicks back up, especially if you're in the city, pacing is down a little bit here too. We have about a third on the books, and we're about to start the month. I would usually like to see it more than half on the books before you start a month, especially for a little stronger season. That being said, we do still have about a week left in this month, so I would imagine that's going to pack on pretty quick. And we're only about 6% down, but 6% down is still more than 10% of the total last year. So still pacing kind of down. November, we have a little bit on the books. This is about 5 to 6% down as well. So pacing pretty poorly there. And then December, it's a little too early. We really aren't down, but also don't have a lot on the books and didn't have a lot of them on the books last year. Now, there's some interesting trend that I do want to show you guys. I'm going to pull up 2026 on here too. And one thing to notice in 2026 is we actually have quite a bit of occupancy starting to develop here in March and February already. We have 2.4 on the books in March, so we have almost double what's on the books for December. And in February, we have 3.5. That's, definitely double what we have on the books in December. And that's really interesting to me. So even though this kind of like middle booking window is weaker, our early booking window continues to remain strong. So like booking way further out remains strong. And this is a trend that we're seeing across the country and really have seen since the beginning of 2025, which is early bookers are still booking really strong. In fact, they're booking stronger. Advanced, super, very far in advance booking is stronger, has not gotten hurt. Once we get into the middle of the booking window, let me actually kind of draw this. I'll draw this as like a goofy little picture. So if this is like, oh, here. If this is far out in the booking window, this is the middle of the booking window, and this is the short booking window. This time period is still really strong. This time period seems to be like missing. It's much weaker. And then this short minute time period, short last minute time period is very, very strong, but it's coming in at a lower rate. And so I don't know why that middle booking window period is missing, but it is interesting to me that the early booking window is strong. What that means for you is you do really want to make sure that your rates are in line and competitive for Q1 already, and that you're not putting yourself in a position where your rates just aren't competitive because there is market share that's being taken. Essentially, this market share that's getting put on the books early, and this has been happening kind of across the board and across the year where we see this early booking being really strong. That is really giving properties a big bump if they have it on the books because we're missing a bunch of consumers in that middle window. So you have to have a mix of this high early booking to balance out the lower mid-level booking or the low rate last minute booking. And I don't know what's causing this trend. I have a hunch that maybe there's like people who, when you're booking travel, you're booking futures, so people can like compartmentalize enough to plan really far in advance. Um, but then when it gets to kind of like the middle time period where you're like, oh, it seems a little far away, but it's not that far. People are pulling back and not making a decision because of low consumer confidence, and then they're making last minute decisions. But this is an interesting thing. I think for everyone here, we do know that this middle period right here is pacing kind of poorly. So that means if you're pacing poorly or you're pacing behind in your portfolio, you probably need to make some changes. If you're pacing pretty well right now, which is not always a surprise, I think we're looking at the overall market data, but professionals tend to do better than the market at large, right? But what it does mean is that as we get into the short-term booking window, there is going to be a lot of choice for the consumer in the last minute. Prices may collapse. It may just be more competitive than you expect because there's a lot of people who are unbooked right now who were booked last year, or a lot of nights that are unbooked right now that were booked last year. So that just means the consumer has a lot more choice as we get into the short-term window. Um, And then out here, focusing on where your rate position is, making sure you don't just have unrealistic premiums and you're actually trying to drive a competitive rate. Usually, rate position is still very strong out here, but there's a tendency in our industry for people to really not price effectively beyond a certain point. Um, and essentially, if you have major premiums that really don't look anything like what you've done historically or what is actualizing in the market right now, you're just telling the market you don't really want to sell. And that can be a big risk, especially if this trend that's been happening all year continues, where the middle booking window is much weaker than it has been in the past, and all you're left with is the short booking window, which tends to occur at a lower ADR. Okay. Any questions or comments on what I've been talking about so far or thoughts? All right. So, I did want to pull up just a small view. This is the high performance view here. um, just to kind of see what's going on. Pretty much seeing similar trends. We do see that the drops aren't quite as big, um, and the position for September is much stronger. So this is the top 20% of listings in the market. They are definitely taking more market share, and where like, that pacing was a bit behind in September, they're in a much stronger position overall for September. So they've taken much more of that market share. October still seems to be pretty low, honestly. So that's kind of interesting to me is they've gotten much more for September, but we don't see a substantial difference between the top and the market level for the October occupancies. And then in 2026, we see they're driving about the same as market occupancy further out. So not a ton of differences between the top performers and the bottom performers, except for, overall occupancies are higher. Had a little stronger performance in April, and then September they've taken a little bit more market share. Now, there's one thing I did want to kind of dig into as we look into just briefly some of these occupancy trends across the market at large. Um, and this is just the occupancies at a daily level, and I'm just gonna look at this. Um, and there's a few kind of things here. I was wondering like how this occupancy is coming in. And for the most part, weekend occupancies are remaining pretty stable. across the year. Where we're really seeing shortfalls, big shortfalls, is these weekdays, right? Weekdays are consistently falling short until we get to September, where everything starts to fall short in the market. Um, but that weekday situation is kind of interesting to me. We see it here, big drops, much shorter stays. Um, and so the weekends still seem to be remaining pretty stable, right? Weekend pricing. Something for us to keep in mind, but the weekdays are really, really struggling. And so really making sure that your weekday pricing strategy is in line with the trends you see in the market may really benefit in taking market share from other people. There are still weekday occupancy to be had. It seems to be much lower than it has in the past, but you have to price for it, right? And so if you're holding higher rates than you're actualizing consistently, that may be a place to consider dropping, particularly if you're having shortfalls in your own portfolio. If you're not, obviously, you maybe don't need to change. Your portfolio is doing just fine in that regard. This is a little bit of a concern for me here. Like, the market has remained fairly stable, even though that we see occupancy pressure, but it is on certain days of the week. We're still seeing the highest value days of the week come in pretty well. Once we get to September, that really falls off a cliff. Like this looks very weak. And I think everyone in the market should prepare for like that to become a trend. Right now, it's not a trend. It's maybe an anomaly. But if it becomes a trend, you have to be prepared from your rate management perspective and your rate strategy perspective to be able to respond to it because that September shortfall is looking pretty large and it looks larger than pretty much anything else that's come in, unless we see like honestly a ton of booking for this week, which would surprise me. Okay, let's look at another view here before we dive into some kind of specific market areas. So this view is asking rates. Asking rates are the average rates that Wheelhouse is observing posted for advertising. So, like what people are advertising their rates as. Where occupancy gives us an idea of demand, like what the consumer is doing, like how much they're purchasing, if there's enough consumers to purchase. Asking rates gives us an idea of how the supply is responding because it's what people are posting as their rates. And that includes rates that are booked and unbooked. So, it's not quite an ADR where you're just seeing what's selling. This is what people are posting, right? So you see whether or not a property sold what it posted. And I think this is a really good way to see how the market is responding to whatever the occupancy situation is. So I'm going to pull a few of these off. We'll just look at this year and next year. And the first thing to note is pretty stable in Q1. But once we get into March, we pretty much see like through the spring, the market is posting a little bit of premiums over what they did last year despite the fact that occupancy was down in the market, right? Maybe that makes sense because we do see that if you recall, a lot of the weekends were really strong, which is driving a lot of the business. So that is probably going to see an increase. While weekdays, maybe people just aren't responding. But we are seeing the market post premium, a little bit of a premium year over year, despite the fact that pretty much through most of the year we had occupancy shortfalls. Now, as we get into the late year and into the future, we see that kind of continue. Like the market is just holding premiums on the rates. For August, we didn't see a big shortfall, but for September, that's potentially a pretty big liability. The market really isn't responding to the fact that the largest occupancy pacing gap occurring so far this year is occurring right now for this month. We don't see the market coming off of these premiums. We don't see it shifting. And as we go further out, we see that those premiums remain pretty high and to the point where almost like maybe November or possibly December, those premiums are pretty substantial, and the market maybe isn't really pricing effectively outside of like 60 to 90 days. Now, when we pull up 2026, we do see that those go up further. It does make sense that our rates would be higher for next year, that people like would have a placeholder at some point. But one thing I mentioned was it probably makes sense to start looking at Q1. That early booking window has been strong. We see it's very strong right now. If you're priced effectively, you can really take a lot of market share, and that difference in market share is the difference potentially between a shortfall if there's a market, if the market's under pressure, or being able to maintain or even improve your revenue year over year, despite the fact that the market may be under pressure next year. And you can see that it may not take a lot of work to do that because the market itself is pricing too much. And this is a trend we see kind of across the board in the vacation rental industry. People are very busy. Not a lot of teams have a professional revenue manager. And that means people just don't have the resources to look out maybe beyond a quarter at the most, sometimes only beyond 30 days. And so there's a lot of advantage to being able to look out and make smaller adjustments and really make sure your rates are competitive 2 quarters in advance or even in the 60 to 90 day window if you can find the time to do it. Now, if we look at the top performing listings, we do see a little bit of a different story. And if you recall, the top performing listings trends weren't that different, but their overall occupancies were, and they were looking quite a bit better for September. The first thing to note is they are responding to the market quite a bit more. We aren't seeing these premiums being held across the top 20%. Big difference between the top 20% and the market at large is there's a lot less unbooked nights. So these are people who actually sold for the most part. Otherwise, they don't get into the top 20%. Whereas when we look at the entire market, we do still see the rates for people who kind of were left empty. But the answer here is they're really not pretty much across the year, except for March and April. They don't have, well, March, April, May. That's an interesting story. So it looks like they were holding the market was pushing rates, but as the year got weaker and continued to be weak, you see a pretty big response to the rates here where they just aren't pushing above year over year. They've really kept a conservative rate position. That's true in September. They're already a little bit below, which makes sense given that September is under quite a bit of pressure. And then they're not even holding rate premiums for October. So they're already starting to bring those down. And it's not until November that you start to see that kind of like far future rate premium, or maybe people don't have a ton of time or aren't thinking too far in advance. So the top performers in the market are definitely responding a lot more to the market pressure. They're responding a lot earlier, going out to October, but still potentially some missed opportunities. Or for you as a revenue manager or a property manager, if you're able to make sure your rates are competitive in November and December now, there's potentially opportunity to just take the market share that can make up for any shortfalls that are occurring in the market. When we go out to 2026, we still see rates are very, very high, which makes sense. Again, just a reminder, I think spending some time to focus on revenue management out here now could be valuable, and just making sure your rate positions are competitive through the end of the year and not just holding a premium that basically is telling the market I'm not really interested in selling right now. Making sure that those aren't in place, that you're more in line with your historicals makes sense, because we have a pretty consistent trend of shortfalls this year, and it seems like as we go into the fall, they're getting a little worse if we take September and expect that to be a trend, right? All right. So, wish I had a little better news there. Seems a little tough. In that it's not mega optimistic in terms of how the fall is coming together. But I think, within that, what's happening at the market data, it's absolutely possible for professionals and people within the market to do very, very well. We've seen that consistently across the country, which is that those revenue management teams and those property managers that are treating the year more conservatively and really thinking out at least 2 seasons are definitely able to maintain or improve their performance despite the fact that their markets may be under significant pressure for the market at large. Okay, any questions or comments or thoughts? All righty. So I'm just gonna hop into a few of these kind of more specific views. Um, This data is going to be a little different. These are going to be our sets data. So our sets data tool is a tool that's partially free and partially paid. And it allows me to kind of make a market report for a specific area. So where these market reports that are totally free for everybody um, cover like a wider area, so like a regional trend, these allow me to really customize what I want to do. So this would allow me to basically draw an area here, a custom area, and filter down into specific groups of listings and create that report. There's quite a lot of data in this part of the platform. People also use it for competitive sets because you can get down to a listing level, which is pretty neat. All of the information that is available on this map part is free, and you can actually build the sets for free. So you can think about what you wanted to use. You can access data on individual listings, things like that. Once you've saved a set, if you're paying, you get access to this, and you can tie all this data to other parts of the platform if you're using us for pricing. So this one is the only one that's like partially free in terms of the data access. Now, a few caveats here. This data is primarily going to be our scraped data. Because you can get down to the listing level, we do not share the direct data we have, although the information we're giving is influenced by our direct data because our machine learning model that is assessing this, our AI machine learning model that's assessing this data is being trained off of the direct data. That is a slight caveat where these market reports that exist at a high level do include all of the direct data we collect. And also, the direct data goes into our model. So just a few things, just so you're aware of what we're looking at. I pulled up a few here that are going to give us a couple extra views. So this first one, and let me just refresh these to make sure all the data is loaded. Oops. Edson, you asked a question here, and I don't understand what it means. Oh, never mind. Nobody responded to it anyway. We'll ignore it. Okay, so I pulled up kind of across the coast. So pulling out the city in some of this data, I did filter down a little bit. I filtered into listings that had more evidence of performance here. So I filtered out essentially the lowest occupancy listings. I also looked for some listings that were open for more than half the year, so at least evidence of being commercialized. Not just like, really what I'm trying to do in this filter is filter out like hosts, right? Um, and we're just going to hop over here. We have access to kind of the same viewpoints that we had on our other stuff. There are some extra ones. But for the most part, we're going to take a look at this coast and we're going to separate out the city. And the big thing here we're seeing is we do see kind of some similar trends in that there's some pressure. Now, it does look a little bit better. Keep in mind, I did filter down to listings that were performing a little better. So these should be more like some of the top performers in the market. It is a pretty big set at 904 listings, but we see some similar broad trends. Q1's pretty good. See a little bit of pressure in the spring, although Easter did pretty well across the coast. It looks like that actually did make up for March's shortfalls, and maybe even did enough to support May from an occupancy perspective. When we hit the summer, where it's solidly the high season here, we do see that there is a little attrition in the occupancy, not a lot, but it does fall a little short. August is in line, and then September looking much better than the entirety of the market that we looked at, that whole area, but still probably going to have a pretty big shortfall because given that we have 6 days left in the market, we've only really got, we would have to put on a lot of occupancy to maintain where we were for September. So given that this is the coast, the fall is much more of a shoulder. And I think something that we're seeing kind of consistently is that these shoulders are under a lot of pressure right now, because consumers just aren't showing up the same way that they were. They maybe don't have the money to pay for those. And as we're looking at the coast, I think we can kind of expect that. Now, October does look like it has pretty good pace, but this September kind of marker seems the same. But otherwise, little less pressure across the year, with summer still looking, the summer attrition being a little bit kind of interesting. Now, I'm going to pull up the city here, and we'll do something similar. Big thing to note, and this I think you guys know, city has a little bit different seasonality, right? And so we see here as a Q1 market, Q1 was actually pretty strong, and that maintained all the way through April. We do see a little bit of that pressure in March, which is a little bit of a surprise, but it does get, it doesn't quite get made up for in April, but overall Q1 is pretty strong in the city. Once we get into May, though, we start to see that trend where we have a little bit of pressure, May and June. July does maintain its occupancy, but it is a little bit lower of a month. And as we get lower into August, we are maintaining, but they are lower months. But again, that September trend is here, where we're really missing quite a bit of business for September. This pacing is really, really far behind. Likely going to be, like, honestly, probably a bigger shortfall in the city than it is on the coast. As we go to October, we have about a third on the books, which to me seems a little low. You know, the pacing here is probably trailing a bit. If we looked up the exact numbers, I didn't have an opportunity to do that this morning. Normally, I would expect a market to be at least 50% of what it did last year if we're going to be on pace when we enter the month. We've got about a week left. It is possible that we could put that extra occupancy on and be just there. But given that this is a high season, it probably needs to be a little higher. So it looks like the market is still trailing here a little bit, right? Um, so it does seem like the city is really also driving some of the occupancy shortfall for October. And then both, the coast and the city see this kind of September drop. So I think the really big takeaway here is September looks like it's going to be a really serious shortfall. As a revenue manager or property manager, you should plan your upcoming strategy for the rest of the year and maybe start to tweak for Q1 based on the question, is the September performance going to be a trend, right? We've had a trend of kind of like slight pressure on the market where it's more competitive, but maybe not exceptionally difficult. September looks to be potentially the start of a different trend. And if they were under a lot more pressure going into the rest of the year, what are you going to do with your rate position? Generally, I think the answer is you need to be more conservative and you need to be operating your revenue management further out. That's how you can maintain your performance year over year, is by making sure that you're competitive in a lot more time periods and you capture that early booking, because that early booking is really what's going to buttress having any kind of occupancy shortfall or having to drop your ADR to make up for occupancy in the short term. Okay. Well, this one's going to be a little shorter today. Normally, I have an opportunity to have some conversations with folks, but I understand if not everyone always wants to share. But that's what I have prepped for you today. Does anyone have any questions or thoughts or concerns, or want to share what they're seeing in their portfolio? I mean, I am a professional revenue manager. I'm happy to talk through some situations. It's what I do with clients all the time. And normally on these conversations, we do have a conversation about what you guys are seeing in specific areas, or if you want me to pull up anything specifically. Nope. Alrighty. Well, if you think of something, feel free to reach out to me. Or if you'd like, want to do an individual consultation, we're happy to pull up your portfolio with you in the Wheelhouse platform and look at your data together, look at the market data on a private level. Just a quick reminder, uh, the Sets data is partially free, but if you'd like to experiment with it, we're happy to give you a trial on it. Market report data, 100% free. I really encourage you to use these trends graphs in particular to communicate with your owners about what the situation is so that you can get them to be kind of like aligned with the strategies you're proposing, right? If your owners are telling you like, we need to be jacking rates up 20% for next Q1 or 30%, talk to them about what's going on and get yourself in a position to be more competitive, because that's going to go to your bottom line too. The other thing too is we do have a number of tools to see your own pacing. So if you really don't have a good idea of how your portfolio is pacing and how it's doing compared to last year, and you need a tool to do that, I sometimes jokingly refer to this as like Key Data Lite. It's a business intelligence tool that has some things like key data, but you can do them faster, and they're very specific to revenue management. So this allows me to see at a daily level what I'll switch this, what my occupancies are by day. It's highlighting my sales. So in the last week, which days have sold and how much have they sold. And I can also overlay things like, where was I at this time last year? So at a glance, you can very, very quickly see if your portfolio is pacing ahead or behind, and really drill that down to the specific day. So if you're going to make adjustments to your pricing, you can see, hey, these days are actually pacing ahead. Even these days are pacing a little behind. And I'm actually just going to drop these days in November, but I'm going to leave these ones that are pacing ahead. So you can really drill down and make very, very granular adjustments to your portfolio where you need to, and know exactly where there's going to be pressure or difficulty. And if you need to, you can match that up with the market data as well to see if the market's also seeing that. So we have a number of great tools to help you be successful. And just as a reminder, this performance page is free. That market data is free. So we're happy to help you get set up if you need some other tools. And of course, if you'd like to talk about using our pricing platform, uh, we've been vetted by a number of great organizations. We're pretty much the top choice for professional revenue managers in the space. And if you want to join the likes of AvantStay and Vacasa and Casago and 360 Blue, um, we'd love to have you and talk to you about how we might be able to help you with your revenue management. Okay, cool. Well, thanks, guys. Appreciate your time.